Good evening, Happy New Year, and I hope you enjoyed the first trading day of 2018. This is going to be a quick recap and plan for readjustment here for Apple. If you follow my videos, you know from the weekend I was looking at some bearish entries. Initial entry was going to be a breakdown below 169.20 or resistance up here around 170, 160-ish area where the 8 and 21 EMAs were crossing. In that video, I also stated if price action came down, triggered in some bears, but started to climb back up, I would likely void that plan and go ahead and take some long positions. As it turns out, that is almost exactly what happened. This was a very bearish pattern. Bears probably took note and tried to be a little bit too aggressive, push price down, but the market maker saw it, ramped it back up, and we ended up with a very nice 15-minute green hammer candle. In the trade crew chat room, I was saying if this turned green and closed green, I was going to enter some 170 calls here. I did get in at 143, half out here at 170. Another half of the remaining position was out here at 194. Trailed the remainder out here at 185. Overall, was a very nice trade right there. Could have really maximized it a little bit better had I been a little more patient and waited to see what was going to happen as it touched this 80 EMA. However, I'll take the profit as it was there and just move on from there. Secondary trade in the day was a break above this flag pattern right here for 169.20 up here around 170, 160. Break above here, got in some 172.5 calls at 59. First half I did trail out at 77. It looked like there were going to be some sellers up here. It wasn't going to hold above this 170, 185 area, so I took half off just to reduce risk. The other half trailed me out here on this break below the 8 EMA. I was a little bit too tight with my stop loss there and left some on the table. Overall, was a very profitable day. Nice 2 trades in the day to make some profits. I want to go here and illustrate the flag that I am looking at. Measure move is up here to around 173.5. Now, if price action does start coming up through there, I strongly suspect we're going to have this gap fill up to around 175-ish area. Now, that's going to probably take a day or two to do that, but for now, I am going to go back to my regular bullish calls and lead looking for supports and breakout entries. I don't normally use Fibonacci levels on my charts for trading. They're just a little bit too subjective for me, but when price action does dictate that they will be useful, I will throw them on there. Today is such a day. Had a nice $3 move in Apple, so I'm going to throw some fibs on here. I'm going to look for pullback to support around 170, 160-ish area, which also coincides with about where the 8 and 21 EMAs are over here. You can see on the daily time frame. I'm going to leave this red line here because that does coincide with it. I'm going to leave these notes here too, just until I feel like taking them off. No real purpose for them, but I'm just going to leave them there. Anyways, initial pullback to 170, 160 or a breakout above 172.30. I've noticed with Fibonacci's in the past that if there's a strong move and it truly has a significant amount of strength, price action will come above it and continue higher. Now, if it gaps up, I will expect it to pull back, test this level. I'll buy versus this level based on probably a 5-minute confirmation of support level. Look for a move up here to around 173.5. Now, this area is going to be significant for several reasons. This brings us back up to the top end of this older channel here on the daily and weekly time frame, as well as the top end of this consolidation channel that I have drawn as a big flag. Now, we have held the 50-day simple moving average very strongly here today, reclaimed the 8 and 21, so there's no point in me going back to bearish entries. I'm very glad that I did flip over on the day and just kind of roll with the punches. Now, in trading, you have to keep in mind your plan does have to be fluid, and when price action dictates to go ahead and change your plan, feel free to do it. Just make sure you keep your risk under control. Now, I do have this labeled as consolidation area. That does mean that if price action does come up to here and chops around, I'm not going to close it just because I see some chop. I'm going to hold on to whatever position I'm in long enough to really see what's going to happen. Most likely will be in next week's calls because this week is a very short week. I will be looking for a target up here, as I said, for this gap to close at 175. We could be seeing a setup for an earnings run-up, pre-earnings run-up, excuse me. Maybe even push up to new all-time highs. That's just speculation at this point. For now, plan is going to remain support 170-160, breakout above 172.30. Hope you have a happy new year. Come join us at Trade Crew, and good luck tomorrow.